Hey guys, welcome back to another video. Target recently announced earnings this week for the first quarter of 2022, and the earnings report was not that good. We can see that this week, when they announced earnings, Target's share price dropped by about 30% in one trading day, and it was trading at about $215 to $220 per share, and then it dropped all the way down to what is now about $160 to $150 per share. So that's about 30% in a single trading day to a single trading week. And it wasn't just Target that got hit hard in the retail sector. A lot of different stocks in the retail sector this week have been getting hit pretty hard. We can see Dollar Tree over the last week is down 22%, Costco is down 17%, and Walmart is down 21%. And so obviously the retail sector is getting hit pretty hard right now. And it's also not just the retail sector. Obviously the stock market has been crashing a little bit over the last week and the last month. We can see that it was trading at about $410 earlier this week, but now it's trading at about $380. So in this video, I'm just going to try to figure out what Target announced in their earnings report and how that contributed to the stock price decline that we see right here. And then I'm also going to figure out if, due to this recent stock price decline, if Target presents a good buying opportunity from a value investing perspective by figuring out the intrinsic value per share of Target. So thanks in advance for leaving a like, and let's get right into the video. So those who are watching this who might not know, just to sum up and keep it short and simple, Target is basically a general store that sells everyday essentials and merchandise at discounted prices. And their main goals are basically just to provide affordability to their customers and also create an engaging in-store experience. And then we can see right here from their Q1 2022 earnings report, if I zoom in a little bit here, this is their income statement for the first quarter of 2022, and they're basically comparing the financial results for Q1 2022 to Q1 2021. And we can see that their total revenue increased by about 4% year over year, from about $24 billion to $25 billion. They don't really show it right here in this chart, but earlier in this report, they touched on a couple of the more specific growth metrics that accounted for this growth in their revenue. Specifically, they pointed out that their in-store sales grew by about 3.4% year over year from 2022 or from 2021 to 2022. But that's not really that impressive because they reported about an 18% in-store revenue growth for Q1 2021 from 2020 to 2021. So obviously, although their revenue has grown from the last year, it hasn't grown as quickly as it was in 2021. So there has been a slowdown in growth. But that being said, a growth rate of about 3.4% year over year isn't that bad, especially for the retail sector. But then on top of that, their digital sales grew about 3.2% year over year in Q1 2022, which was compared to 50.2% in Q1 2021. So again, right here, we see that obviously last year there were more lockdown measures still in place, so people were still shopping online primarily. And that was one of the reasons why Target and other retailers saw such a substantial increase in their digital store sales. But obviously, because people are now shopping more outside and they're not really spending as much online, Target is experiencing a slowdown in growth in their digital sales. We can also see right here their operating income declined by 43.3%, which is extremely large, and that primarily came as an increase in the cost of sales. As we can see right here, their revenue only increased by 4%, but their cost of revenue increased by 10.4%. And so obviously because of that, their operating income declined from about $2.3 billion to $1.3 billion. And then also we can see right down here that their net earnings decreased by 51.9% from about $2 billion to about $1 billion. So obviously their earnings report, this was the primary reason why their share price dropped so much, is because their earnings just did not meet analysts' expectations. And then right here we can see their earnings per share decreased by about 48.2% from $4.17 per share to $2.16 per share. And if I scroll down here, we can see the second financial statement of the three that I'll be covering before going into the discounted cash flow analysis. It's the balance sheet, and we can see they're comparing the Q1 2022 financial position to the last quarter, and then also year over year from Q1 2022 to Q1 2021. And we can see that from the last quarter, their total current assets have decreased primarily as a result of a decrease in cash and cash equivalents. And we can see that their total assets have also decreased. And we can also see that the majority of their business is financed by debt, not equity. As we can see, their total shareholders' equity comes out to only about $10 billion, but their total liabilities and shareholders' equity comes out to $50 billion. So they have about $40 billion of debt sitting on their balance sheet, which could mean that their business could be over leveraged, but it really depends, because obviously the more debt they have on their balance sheet, the higher the interest payments are going to be that they're going to be making each quarter, and that's obviously going to eat into the amount of cash that's sitting on their business. And then lastly, we can see right here in their cash flow statement, there are some pretty interesting metrics right here. We can see that they actually experienced a net loss in their operating activities for the first quarter of 2022 of about $1.3 billion compared to a net revenue inflow from their, or net cash inflow from their operating activities of $1 billion in the first quarter of 2021. And then also right here, we can see a pretty interesting line item, accelerated share repurchase pending final settlement. This is basically just an accelerated share repurchase arrangement that Target entered into in the first quarter of 2022 for $2.75 billion worth of shares that they'll be buying back. And then also we can see on top of that, they repurchased about $181 million worth of shares, and they also paid out about $424 million worth of dividends to their shareholders compared to only $340 million for the first quarter of 2021. So there's a lot of value that Target is giving back to their shareholders, both in the combination of dividends paid to their shareholders and also in repurchasing shares for their shareholders. So that, coupled with the fact that Target just experienced a pretty sharp decline in their share price, could be reasons why Target might present a good buying opportunity, but we'll get into that right now. We can see obviously their cash, net change in cash was a outflow of about $4.7 billion from $5.9 billion to $1 billion on their balance sheet. And so lastly, what I want to do is look at the discounted cash flow analysis to figure out what the intrinsic value per share of Target is. And I got some of these estimates from Yahoo Finance. They're estimating that the growth rate for the next 5 years for Target is going to be about 20% compounded annually. And so for the next 5 years after that, I was conservative and left it at 10%. Their free cash flow for 2021 was about $5 billion. And then they're currently sitting on about $15 billion worth of debt on their balance sheet. And they have about 463 million shares outstanding. And so with those metrics taken into account, we can see the intrinsic value per share is estimated to be about $233 per share, with a 30% margin of safety of $163 per share and a 50% margin of safety of $116 per share, which compared to their current share price means that they're currently trading at somewhere in between a 50% margin of safety and a 30% margin of safety, which is good because it could mean that they're presenting a good buying opportunity, since based on these metrics, they could be trading currently at less than their intrinsic value per share. Also, when they were trading a few days ago at about $212 to $220 per share, they were trading closer to intrinsic value per share at that point, but obviously due to the recent share price decline, they're trading now at a potential margin of safety, which is something that Warren Buffett always looks for when he's investing in companies. And lastly, I wanted to do a quick competitor analysis to see where Target ranks up in the operations of their business compared to their most competitors in the retail industry. Right here, I just compared them to Costco and Walmart, and we can see that Target's margins actually beat out Costco and Walmart on all fronts. I got these straight from their financial statements, so we can see that their gross profit margin is higher than Walmart's and Costco's. Their net profit margin at 6.5% is higher than Costco and Walmart's only 2%, and the return on assets of about 13.22% is higher than Costco and Walmart's 8% and 5% respectively. So they're obviously using the assets on their in their business to get a return more efficiently. And on top of that, their net profit margin and their gross profit margin are higher than Costco and Walmart. So compared to the rest of the industry, it seems like Target is beating out their competitors in terms of actual gross profit margins and percentage rates and things like that. But I would definitely love to know what everyone watching this video thinks about Target. Is it a good buying opportunity right now at the current share price? And is anybody going to be buying into Target or any of these other retailers that recently took a hit as a result of the recent stock market crash that's happening right now? Let me know in the comment section down below. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.